this could be the long called for recession, right? When you have a scared consumer, you have scared businesses, and you have a government that's cutting spending, I don't know how GDP grows. And if that, I mean, that we could be in this spiral
Yeah.
where, you know, dude, we could get some price adjustments. Alrighty, folks, I want to get a market update. We're not going to talk national. We're not even going to talk California. We're going to talk about Orange County, California. Again, folks, if you don't know Orange County, their median home price is damn near $1 million, seven figures. We're going to talk to the one and only Adrian Hernandez, who is a rock star agent and broker and buyer/investor in Orange County. Adrian, what's going on in Orange County? Are rates falling and prices going up or what?
What's going on, guys? Yeah, interesting, right? You would hope that interest rates kind of came down a little bit. Everybody on the media was can't wait, can't wait, can't wait. Well, they went down a little bit, and we are not seeing expected market time moving at all. And we're just talking about Orange County. If anything, we're seeing some between some home prices, they're actually going up, right? They're increasing versus decreasing, which is interesting, right? And I want to get your take on Zuber on this also on a national level, on a state level, right? But if we just look at Orange County, I mean, anything between 1.5 down to 750 has an increased expected market time, which is very interesting.
So let's actually step through this together because I think it's important to tell the full story. And the story with real estate begins with inventory. So let's start there. If you were to look at the inventory actives, right? Actives today, stuff available, how does that compare to last year?
Yeah, when we look at actives, we have here, we actually have real live data from Stephen Thomas. Shout out to Stephen Thomas.
Yes.
Stephen Thomas reports on housing. And what we're seeing from last year here, and I have that, right now we have 3,419 homes available to purchase.
Okay.
It's 64% higher compared to last year. Now, we all know, for those of you following Zuber's channel, last year was a historic low. We had 2,084 last year.
Yeah, it's Orange County, for whatever reason. Yeah, last year was a cycle low for active. So, okay. So year on year, inventory is up 64%, which is interesting because, again, thanks to Lance Lambert, Resi Club, we know that interest rates year on year are down, right? Interest rates today are lower than last year.
Right.
Not by a lot, but down. And, that's interesting. So when you think about supply growing 64% in a year, there's only two things that could happen. One is you could just have more motivated sellers, right? More people that have to sell. Or what you have seen is a historic drop-off in demand.
Right.
And I would be interested to get your opinion as a broker, as an agent, as an investor. Do you think this is just more distressed sellers? Or do you think buyers are scared? Where do you come out on that?
Yeah, I think that sellers and buyers are scared. I think they're both scared. I think that you have a lot of the sellers that are, you still have the wishful pricing, right? Hoping they're going to get a certain amount, but there's a lot of uncertainty right now. And I think that's the reason why we aren't seeing some major changes in demand. You would think there would be. Now, the people that have to sell, right? If I look at the investment side of our business, it's crazy. It's the busiest it's ever been. But those are the people that absolutely need to sell.
That's the little wrinkle in all this. It's really funny because I told Ryan Pineda this on his podcast. I think it published about 2 or 3 weeks ago, that the only winners in 2025 are going to be investors, because
I agree.
We're numbers oriented, right? And our job is to find motivated sellers. And in a world where inventory is building like this, sure, a majority of them are going to be wish pricing, right? They don't really have to sell, but if they get it, they get it.
Right.
But you know what happens inside that, whatever it was, 64% increase, there's 10, 15, 20% of folks that have to sell. And when they get by the first 2 weeks, the first 30 days, the first 60 days with no activity, dude, that motivation goes up, up, up. It doesn't shock me that your business on that side is busier than it's ever been, because in a world where buyers are scared, where buyers are nervous, they're not going to write an offer, dude. Consumers are remarkably predictable.
Yep.
If they are scared, if they are concerned, dude, retail sales came out yesterday, and in the last 90 days, we collectively have gone to restaurants 9% less times.
Wow.
If you're not going to a
Wow.
restaurant, do you really think you're going to be writing an offer on $1 million, a $2 million home? Hell no.
Nope.
So it doesn't shock me.
Yeah. And
Doesn't
the
shock me that
traditional
some
market,
stores-
that's really what it is. It's really hard for the agents. It's really hard for the buy. I would even say the buyers that absolutely need to sell, that need to buy also.
Yeah. I'm starting to feel really, really good about my call that 2025 is going to be the last hard year for real estate agents and brokers and escrows and mortgage, because it will get better. I know it feels dark. I know it feels, but it will break. And so
There's
again,
also
what you're going
to, sorry, didn't mean to speak over you.
Go for it. No, go ahead.
No, I was going to say there's also the change in the commissions, right? There's still a lot of agents that are still very uncertain on how to navigate the waters and what's going on. And I say that because we're now starting to call a lot of on-market deals, and we're starting to talk to a lot of these agents, and it's interesting, Zuber. It's very
So I'm curious. Let's talk about that. Let's break that down, because again, one of the things that you're really good at is you're going to go where the opportunity is. Do you have is it kind of a day threshold? Like, hey, at 45 days, my team's green light to call them? Because I'm going to guess you're not calling first day listings.
No, we are calling first day listings, but the only
Really?
only first day listings we're calling are those that are either that have a high motivation. So it's either probate, it's a notice of default, it's a trustee sale that are coming on the market. Most what I've noticed on the standard listings, the regular homeowner that has a distressed house who puts it on the market, they're wishful pricing, and that's where your tactic comes into play. That's definitely where I'm like, you guys, you're writing them disrespect. They've been on the market 100 days. Throw them a disrespectful offer. Figure this out.
Force their hand. Yeah.
Exactly. But we like to get in front of the new ones also, because there's where we're at, we have a lot of the MLS companies, right? So we have like the big companies that where all they do is go after the listings, right? They built a very good business just buying on market deals. And so we like to get in front of them at the beginning and then create that relationship with the agent so they can send us the next probate listing that they have.
Got it. That makes total sense. You're building the Rolodex. It's not necessarily this deal. It's the next deal.
It's the next deal. Right.
That
Because we're trying to create that agent relation, right? Every now and then we will. What I noticed is obviously when we submit those really, really low offers, right, we piss them off right from the beginning. So we're trying to find that in between, just because it's a model for us, and trying to find that dance. And we'll let them know before we do it, right? We'll be like, hey, look, you've been on the market 120 days, right? You want to get paid just as much as they do. I'm just going to shoot it. Just present it. Don't shoot me. Just present it. Let's see what happens.
Yeah. You're going to get a reaction. It may be good. It may be bad. Let's just have that conversation. So let's go back to the market. So again, Orange County, inventory up, demand down. So that means probably for the majority of your price segments, days on market is growing. It's increasing. Is that true?
Yep. And we're seeing it here. So last year, market time 0 to 750,000. Today is 46 days. Last year was 31 days.
Wow. So that's like 30%, maybe 40% higher. Again, that's just what happens. Days on market goes up.
Days on market go up. So let's look at 750 to a mil, 40 days today, 27 days last year.
Ooh, now we're getting. So yeah,
million.
So okay, so now let's just do this. So more inventory. Inventory is staying on the market longer. Prices have to be going down, Adrian. Prices going down, right?
All the conversations I'm unfortunately having with my listings are we have to do a price reduction.
But hold on. So a price reduction doesn't mean necessarily prices are going down. Like, what are prices go year on year? Is Orange County falling?
No, because we have Orange County's unique because we have this 2 million to 4 million that just seems to move like crazy, right? So it's
but
no,
that's
because
always
that
been the
sector,
market. Yeah.
What was that?
It's always been. So that's why you got to have these conversations with somebody who knows what they're doing, right? The fact is, in Orange County, inventory is up 64%. Days on market are up 40%. But if you look at the median home price sold, prices are up, correct?
Prices, yeah. Prices are up.
It blows people's minds.
It's wild, right? It's wild. Now, I do have statistics for Los Angeles, Riverside County, and San Bernardino County. We want to quickly look at that.
Yeah, go for it.
So current actives in Los Angeles County is 11,469 today. The demand last year, compared to, demand last year was 3,810. So in the last 30 days for demand pending was 3,810, right? Okay. The market time in days is 92. Market time 2 weeks ago, market time today is 90. I apologize. Market time today is 90. Market time 2 weeks ago was 92. Market time 4 weeks ago was 92. So we're not seeing much change.
Yeah.
Right.
And it's really interesting. Again, we're talking about Orange County, roughly 40, 42 days. LA County, 90 some days. 90. And LA's got to be a much smaller price point, right? Probably 600-700.
No, because of because of like that Carlsbad, that Calabasas, Malibu, okay. It's still kind of right. It's still up there, right? I want to say it's still like 850, 900.
Okay,
right?
So it's still
up there. But this is what's interesting. So today, right? Today we're seeing 90 days. Last year, want to take a guess?
68.
You're freaking good. 65.
Oh, I'm gonna call that again. Yeah, but so again, this is again, now we have a story that's growing. The story is inventory is building significantly. Days on market growing significantly. We still have this almost distortion of prices going up. And again, I've been telling people for a while that the median home price going up is a distortion because it's a product mix. Right. It's a mix problem. We're seeing the Orange County 2 to 4 million move because some people are just filthy stinking rich, right? And they're going to buy what they want. Price be gone,
right?
And what we're not seeing yet is we're not seeing the entry level stuff unlock in a meaningful way.
No, not at all.
So the only way that the low end, and when I say low end, I mean entry level housing, first time home buyer stuff. I can only think of two ways that unlocks. One, mortgage rates go sub 5.25. Let's call it 5 just to make it easy. Today we're at 6.5 or 6.7. So if mortgage rates went to 5%, and I'm not saying they will, I'm just saying if, that will get some people moving. You'll see more, because what you're missing is the move up buyer. I'm going to sell this and I'm going to buy this. Because rates don't matter, or rates make it unaffordable. Or there is a second option. We could see mass layoffs in tech workers and whatnot in Southern California. And if we saw the unemployment rate, let's say double, you're going to see a lot of forced sellers, right? That could also happen.
Right.
And that's why people are scared. Right? They see what's going on. They see that all these layoff notices and they think they're next, or they fear that they could be next, and maybe not them, but their spouse. So that's why you're not selling and you're not buying. Right. But if we unlock, it's really a weird thing to say, but mathematically, if you unlock the low end, you're actually going to see the median home price fall because that'll just be more transactions.
Right. And it was interesting because I had a client ask me the same thing. That their house is priced within that lower median mark, and I'm like, unless we see a major change in interest rates, I don't see it happening. You're also, again, bring up the commission. You also have some agents charging some of these buyers, especially entry level buyers, $2,000 to $3,000 on their own side. They just can't afford it, right? And then to your point on us going to the restaurants 9 times less, right? That's in that's
9%, 9%.
Oh, 9% less, right? I have a lot of buddies that have regular brick and mortar businesses, right? That have service businesses. I was with them, a couple of weeks ago, and all of them are saying the same thing, right? They're like, no, dude, we're being careful on what inventory we buy.
Yeah, it's slowing down. And again, it's this could be the long called for recession, right? When you have a scared consumer, you have scared businesses, and you have a government that's cutting spending, I don't know how GDP grows. And if that, I mean, that we could be in this spiral where, dude, we could get some price adjustments. We could.
I can see that.
What percent of listings, just a wild guess, in Orange County do you think have had a price reduction? What percentage? Wild guess.
In Orange County, 35%.
That's 40%. Pretty close to the national average, according to Lance Lambert. Or no, I'm sorry, Mike Simonson. Let's give credit where credit is due. Mike Simonson, Housing Wire. Yeah, I think it's 78%, or not 78, 38% of active listings have had at least one price drop. So you're right. You're right in the range.
Yeah, I could see that. And you just don't have things moving. Even when we're running our comparables now for our investment properties, I can't go off of last year.
No, this is what I tried to tell you 3 or 4 weeks ago, dude. Since your investment side is booming, you got to take your models down. You got to get fatter margins.
Yeah. And when we are at the appointment, we have to express this to them. Like, hey guys, look at all the price reductions just on the normal market. So you think you're going to get this today, but you're really not, right? I literally had this conversation yesterday with the lady in Marietta. They're hoping they're going to get 450. It's not going to happen. It's a matter of fact, if you guys don't take 400 today, it's going to go to 370 if the market stays the way it stays, right? And some of them are understanding that those that feel that feel what everyone else is feeling also, they can relate, right? And they can see that. So it's going to be
well. Let me ask you this question: long people have been wanting prices to go down. Do you see a collection of activities that actually might take prices down? Let's talk Orange County first, because that's your backyard. I mean, could you see something where prices are down 5%? In the next 6 months?
For Orange County, I'm going to say no, because I believe that there are enough funds out there that are smart enough to come in and buy everything before it gets there.
Okay.
Orange County is just a little bit unique. Now, if we were to go to like Northern County, Anaheim, Garden Grove, even then the demand is just the demand is there right now. Can I see?
Well, hold on. Hold on. I'm going to push back just a smidge, right? Because I think you're having realtor goggles. I don't know if that's a thing, but I'm going to say it anyway.
I could be.
Yeah. Because a minute ago we said inventory is up 64% and days on market are up 40%. So how could demand be there?
Yeah. And so I say demand on the investor side, when you're looking at them giving away homes, for us to decrease that 5%. Let's just say we were to decrease 5%, right?
Okay. Sure.
I see investors buying that before it happens. Now, could it?
Wow. You think 5% is enough margin?
There's a lot of hopeful investors in Orange County.
Okay.
There's a lot. There's a lot that much rather buy their kids something here than in LA County, especially with what's going on, right? We are, right? Yeah. So I'll leave it like that, right? I don't know. Could it possibly?
So again, Orange County is a special place. Also relatively small. It's a pretty small footprint.
Beach cities, absolutely not. Absolutely not. Inland cities,
maybe.
I can roll a dice. I don't want to be, I don't see the beach cities doing it. I really don't.
Yeah, it makes sense. I mean, anytime you have a very limited supply, which happens in a small, it doesn't take but 3 buyers to distort the market.
Right. Right.
Yeah.
Right.
Okay. I like that. So
No.
it is possible in LA County.
Oh, without a shot. We're already seeing it. Yeah. Especially with the fires and people just trying to get out of LA County in general. We're already seeing it. I mean, there's 11,000 houses in LA compared to what did we have in 6,400?
Yeah, 64. Yeah, it's almost doubled.
Almost double. So.
Yeah. So again, I think what you're seeing in California, or at least Southern California, is very much reminiscent across the country. Inventory is building. Days on market is growing. Prices are stubbornly high, but again, I think mathematically speaking, it's an inventory mix problem. When you think about unlocking the low end, the first time entry level, we either need dramatically lower rates or we need dramatically higher unemployment rate.
Yeah.
And either of those two will change the market almost overnight.
Now, but wouldn't on the unemployment rate, wouldn't that also affect the demand in that price point also? Because now we're squeezing out those buyers.
No, absolutely. That's why prices would fall. Yeah.
Right.
That's what I'm trying to say is, if let's say unemployment went from 4 to 8% in LA County. I don't know where unemployment is, but let's say whatever it does, it doubles. You're going to increase supply because some of those people have to sell, and you're going to kill demand because people are scared.
Right.
And the only fix for that is lower prices. Now, the crazy thing is if we have unemployment go from 4 to 8 in LA County, nothing happens nationally. But if we go from 4 to 8% nationally, the Fed will whack rates. And then you have mortgage rates are 4.25, unemployment's 8%. That also means we have 92% employed.
Right.
So that's the game we'll play if that happens.
Yeah. Would we relate to, and I know the interest rate market is different, but would we relate the overall market temperature to like 15, 16 when it was really hard to get a home sold? And I'm going back to my agent days, right? Because I was doing expired listings at that point.
Yeah, I would say, I think the market we're rolling into is very much like that. I don't think many agents realize what's coming. It's going to be, we're going to be calling on expired listings. We're going to have, you got to a point where if your house didn't sell in a week, you were yelling at your agent. Now it's going to be 60 days or 90 days. It's going to be that. Yeah, it's going to be, dude, I keep telling people 2025 is going to be hard.
Yeah.
But it should be the last hard year.
Yeah. I'm relating it to when it was really like 15. I remember it was just everything was on the market. Nothing was moving. A lot of uncertainty. Interesting. All right.
Yeah. So I think that's coming. Well, this has been a fun conversation, folks. Let me know what's going on in your market. Are you seeing inventory up, days on market up, and prices up? Which is kind of an interesting combination. Adrian, where can people find you?
Instagram, guys, at Adrian Hernandez. Appreciate you, Zuber.
Yeah. Take care of yourself. Later.